process something like 1.6 trillion of payments across our digital infrastructure every year in Lloyds.
Hello and welcome. My name is Brian Caplen, editor of The Banker, presenting a masterclass on the changing dynamics and landscape of payments together with Lloyds Bank. I'm joined by Adrian Walker, who is Managing Director for Global Transaction Banking Products. So Adrian, these days, there's a lot of emphasis on small and medium-sized enterprises as being the growth driver for the economy. So how much are their needs on the payments side different from those of big corporations?
Yeah, it's a very interesting change in dynamic that we're experiencing across those different client segments. So historically, you'd have had a situation where the global corporates would have driven the innovation of the payments world as banks look to scale up to support the very large-scale payment requirements of a big global corporate. But what increasingly we're seeing is the smaller SMEs are driving the digitization agenda of payments because they have more appetite for risk and they're less complicated business models. And so actually what's very interesting about the way that the dynamics of the industry are changing is actually SMEs are driving the innovation into the payment industry, and that's causing the pace of change and the level of different thinking required to increase, which presents some quite interesting challenges for the banking community.
So interesting, yeah. Because Lloyds Bank is very focused on the SME sector,
it is.
Right? So how do you manage to marry those two up so that you're serving the SMEs, giving them what they want, and the big corporations what they want?
Well, the unique thing about Lloyds is the way we're structured is all of our client relationships, from the very smallest SME to the very largest global corporate and financial institution, are all housed in the same business, which is commercial banking. And what we tend to use the exact infrastructure for the very largest to the very smallest. What we try and adopt is different channels of delivery. So in the smaller end of the market, we're looking for more opportunities to go mobile and to use more digital infrastructure. And in the larger end of the market, we're increasing our capacity to build out host-to-host and SWIFT connectivity. And we're about to launch, in fact, later this year, our new digital front office, if you like, our front office portal for all of our clients in the global corporate and mid-market spaces.
Okay, so no one can say they get second best treatment, whether they're big or whether they're small. But now let's turn on to liquidity. That's become an increasing issue for both banks and corporates. So we've had Basel III, and that's very much focused on liquidity. How's that impacting on the payments business?
Well, I think it's one of the major things, one of the major driving forces behind innovation in payments. From a banking perspective, there is clearly a desire to be more in the operational payment flows of all of your clients, and one of the reasons for that is because you get better treatment of the output liabilities that stem from that commercial activity, from the activity of processing payments for your infrastructure. So you get a much better treatment under Basel III. From a client perspective, liquidity has never been more important because obviously liquidity is an output of good working capital management. And for an SME business, that's important in terms of making sure that they're optimizing all of that activity so that they can use that cash for other investment opportunities. And in the global corporate space, there are complications regarding cross-border liquidity challenges around having trapped cash in certain overseas jurisdictions, and how does a group corporate treasurer manage all of those different dynamics in order to optimize the best position for its company.
Okay, now you mentioned that the SMEs were driving the innovation agenda. So how quickly is payments moving to pick up with things like online use and mobile and the whole digital environment? It's interesting, isn't it? Because you normally talk about a new generation taking these things up fast, and we tend to think of the commercial sector as a little bit more conservative on the pickup.
Well, it's actually accelerating. To be honest, I think most people would have thought that checks would be almost pretty much a dead method of payments, but it's still actually quite a significant part of the overall payments industry. But if I think about my own business, we are certainly seeing very significant acceleration into the digital payment infrastructure in the smaller end. We process something like 1.6 trillion of payments across our digital infrastructure every year in Lloyds. And we're seeing across a market basis, we're seeing something like 12% increase in volume of digital payments. So definitely the trend is happening, and I think one of the other interesting factors is actually for the first time digital payments are larger than the payments utilising either cash or checks. So the trend is happening, but checks remains a very important methodology for making payments between corporates.
Okay, Adrian, thank you very much for giving us that update.
Thank you.